Hello, my name is Cameron Ripley. I am with Purpose Home Lending, NMLS 2613494. And today we're going to be talking a lot about accessing your equity without refinancing the low interest rate that you have. A lot of times we are getting people who are calling us and saying, well, I want to be able to access my equity to have funding to start a business, continue to fund my business, make improvements on my house, pay off a lot of debt with high interest, like high interest credit cards, pay for a wedding, pay for my kids to go to college, pay for me to go to college. What's the other one I heard recently? Just have some extra cash or have something for an emergency, whatever it might be. But we're getting a lot of people who have a really low interest rate, whether it's in the low fours, threes. Usually it's people, classic is I've got an interest rate at 2.875 that I don't want to touch. So here's why a home equity line of credit would be a good option for you, but here's also some myths about it. It is an approval process that you want to go through, but there are a lot of benefits to it. So it's not necessarily free money. Anytime you hear free money or you hear no cost, I'd probably run for the hills. It can be no money out of pocket though, because we can roll closing costs, which usually are not much. They're not like your regular mortgage when you buy a house, or even when you refinance a house. They're a lot lower, and we can really roll it into the loan, or you can spend it out of pocket. So here's how you can access a home equity line of credit as a second loan on your house, and what are some of the options. So as an introduction, understanding your financial tools like home equity lines of credit or a cash out refinance is essential to home ownership. There's going to be a lot of times where people need to make major improvements to really add a lot of value to their house. A home equity line of credit or a cash out refinance can be great. I always tell people try to look at both options. Sometimes, even though your interest rate is 2.875, when you look at the math behind the payments and the interest rates, it's better to do a cash out refinance than a home equity line of credit. If you 100% do not want to touch that, I'm not going to oversell you, and I would just stick with a home equity line of credit. Let's go over some of those options, but it's a very important tool. There's a lot of things you can do with it. Like I said, you can make renovations on your house, which I think is extremely useful because a lot of times people don't spend money on their house and improving it. Instead, they focus on paying down their mortgage faster. That's great, but your house will sell for a lot less than your neighbors' houses who have renovations. Right now in society, people want more renovations in their house. It used to be you don't renovate your house just to sell it because someone's going to redo the renovation. Not happening anymore. Nowadays, people just want something that's move-in ready. So renovate it when you want. If there's something you don't like, then you should do it. What is the benefit of a home equity line of credit is that it gives you the flexibility. It's a line of credit, so it somewhat comes at a higher interest rate. However, you make interest-only payments for the first 10 years. That's specific to one of our favorite HELOC products that we have, home equity line of credit. You can use it for emergencies. You can do a draw. So for instance, I had someone very recently who wanted to do a whole kitchen and bathroom renovation. It was going to cost $50,000, and they decided they wanted to get, we talked about why there might be reasons, mainly because they were business owners. They decided to get an $80,000 line of credit, or maybe it was $90,000. And they just did an initial draw of $50,000 to make the renovations. They're making interest-only payments, and they at some point are going to decide whether they want to do a cash-out refinance or just a refinance and pay off that HELOC, or if they're just going to pay it off, but they have extra funds there for other things they may want to use, just like a credit card, because you get a card in the mail, but it's up to them if they want to use it for that. What is a cash out refinance? It's literally paying off your existing mortgage with a new one, but taking some extra money. So if your house is valued at $600,000, you owe $300,000, but you're doing a cash out for $400,000, meaning you're paying off the $300,000 and getting a cash advance of $100,000. Your total loan amount is based on the new loan amount. So that's why sometimes if people's initial loan amount is much lower, even though it has a 2.875 or less than 3% interest rate, the math on it is better to do a cash out refinance versus a home equity line of credit. But you do make payments on principal and interest. So that's why it depends on your goals. This is why it's very important to talk to a professional who will sit there and hear what you want and give you options based on what you envision and what you are looking for. Because everyone is very different on what might be the better option. Some people want to make interest only payments for a period of time because they may know, I've got bonuses coming in, I've got tax deductions, I've got higher business income, and I'm just going to pay that all off once in less than 10 years, but let me do that on my own time. Instead of saying, and others may say, no, I'm fine. I just want to know that if I spend the money, I know what the interest rate is, and that's why I'm totally fine making principal and interest payments only. Let's do a cash out refinance. So benefits of a HELOC is a little bit more flexibility because you have that prepaid card. You're making interest only payments on the amount that you draw. So let's say, you have the option between $150,000 cash out on a refinance or a home equity line of credit, and you decide to go with the home equity line of credit because you only need $50,000 now, which leaves another $100,000 for emergencies or other goals you may have. That's up to you, right? You're only making interest payments on that $50,000 that you took as an initial draw. That other $100,000, if I choose to use it at some point, great. If I don't, oh well. Then I'm not at least making payments on it. Whereas a cash out refinance, I would be making payments on the amount that I don't use. Sure, I could take it and then put it down towards my principal balance, but I've been making payments on it. So hopefully that helps. The closing costs are a little lower with a HELOC versus a cash out refinance. But once again, this is best as an example for a side-by-side comparison. More benefits of the cash out refinance is really the lump sum. Once again, you should really be looking at what are the benefits. Is the potential, it's not necessarily, okay, I'm losing my 3%, but it depends, because when you look at the math, there are a lot of times where it just makes so much more sense to do the cash out refinance versus a home equity line of credit, even though you're losing your 2.875 on another amount. And that just when it's a line of credit, there can be a little bit more risk for any investor, so the interest rate might be a little higher, but that's why we should really take a look at both examples. It's a few clicks of a button to show someone a side-by-side comparison. Common use cases, like I said, home renovations. We get so many people that ask about debt consolidation. Let's be clear that debt consolidation, if your income is going to remain the same and you've maxed out some pretty high interest loans, whether that's personal loans, probably not student loans, but maybe student loans, credit cards, whatever it might be, and those interest rates are well above the interest rate of a home equity line of credit, then we can help you. You know what our favorite thing to do is? There is something that we Google called a blended rate calculator. It is a free Google tool that I do for people, and I just show them, what's your interest rate on this card? What's your interest rate on this personal loan? What's your interest rate on your student loans? What's your interest rate on this? And I say, okay, the HELOC is this. So that we can show you how much you are going to save on paying off all of those debts because they have various interest rates, and use a HELOC or a cash out refinance. Once again, an emergency fund can be great as well. Some people have times in their life where they don't know what their hospital bills might be, or let's say you're retiring at 64 and you are worried about making a lot of out-of-pocket expenses until Medicare kicks in. This is one case I've just heard of recently. And so you just want to make sure you have an emergency. You're going to pay for some house renovations, but you still want an emergency fund until you turn 65 and can access Medicare. Once again, major purchases. Sometimes people want to buy cars. Sometimes people want to. The getting married one has been a big one for us that people are looking into. The other one is trips. Sometimes people can just do a regular refinance and take out, usually it's around $2,000 or a little bit more, but there's some rules where it doesn't count as a cash out refinance. And in those cases, they're able to use them for a trip and lower their monthly payment and lower their interest rate. But educational expenses is huge. Business ventures should be a bigger one. When I started my company, Purpose Home Lending, before I had talked to someone who said it's hard to start a business if you don't own a house. And I didn't understand why until I realized that SBA loans, Small Business Association loans, usually cross-collateralize. So they put your house as collateral. But it's sometimes even better just to do a cash out refinance or a home equity line of credit as your seed funding for your business. Once again, interest only payments is really nice. And yeah, exactly. Interest only payments can give you a lot more flexibility for a lot of these options, and you can pay it off as fast as you want or as slow as you want. Let's say you are making interest only payments, and right now in your life, you can dedicate an extra $100 a month towards the principal balance. That's great. But maybe you'll have times in your life where you don't within that 10-year period, and times in your life where you say, hey, I've got an extra $5,000, I'm just going to start paying this off faster before the 10 years is up and I have to make principal payments as well as the interest. So that's where the flexibility of the payments comes in. You know, the main things to consider really in my mind is what do you want to do, and outline why you think you don't want to do a cash out refinance or why you may not want to do a home equity line of credit. My biggest thing is whenever someone talks to me, just please share your goals. I'm here to be your representative and not sell you. And that's how you should feel with anyone you're talking to, is that, hey, this person's giving me options and letting me decide. They're advising me based on what you told me. This is why I think you should go with this route. But obviously it's totally up to you. Here's a side-by-side comparison of both. Let me know what you want to do. Best thing is we can do that without doing a hard pull on your credit. If you could just sign up for, like I have this app called Key Steps, and you could sign up for my app through my link. You can set up credit monitoring free to you. It does a soft pull, and it tells us what your credit score is at, what other debts you may have, and we can just go off that for a preliminary pre-approval. And then when you're ready, sure, then we'll need to do the hard pull. But thank you so much for watching this recording. I hope this is helpful, and please feel free to reach out if you have any other questions or want a quote.